By now, you would have heard of the big news that Alibaba is splitting up into 6 diverse groups, and the legendary founder Jack Ma has been coming back to China for the first time in more than a year or so. So, in this video, we're going to talk about 4 reasons why I'm buying Alibaba, okay, which include the financials, comparing of the peer valuations, and my own personal take on the firm. Okay, but before we move on to that, do help us to like our video and subscribe to the channel and hit the bell notification so that you can know of more such interesting videos going forward. And in return, okay, I will share with you a financial meme. Okay, back to the 4 reasons, right? The first reason why I decided to buy Alibaba is because of the recent news that it will split the company into 6 different diverse groups, each with the ability to raise outside funding and go IPO in the end. Okay, so this is a pretty significant deal for the company because, as you all know, Alibaba is a huge conglomerate with very different market-leading divisions like Taobao, Lazada, Cainiao, Youku, Alibaba Health, Alipay subsidiary, and more. There are so many of them. And this is exactly why the Chinese government feels threatened by their monopoly status in China and implemented many, hindering regulations for Alibaba. And all along, many investors know that Alibaba is somewhat undervalued due to the government stigma, right, and the obvious intervention by the government. So with this splitting up of the conglomerate and also Jack Ma showing his face in the public, I can only relate to this Chinese proverb called 万事俱备，只欠东风. So in English it is everything is ready except the east wind. Simply put, Alibaba's reorganization will prove to the government that it is aligned with their policy of fostering market competitiveness and in turn will help to unlock shareholder value for the company. And actually, to add on, right, the fact that Jack Ma has resurfaced, okay, quote unquote, right, is also another positive sign that the government is warming up to all these technology businesses and also, like, inviting Jack Ma back to act as a public face for this change in government policy. Okay, and next up, for the 2 following reasons, so the second and the third reason, I will turn to Seeking Alpha to dive into the financials as well as to compare among the e-commerce peers. Okay, here we are now at the Seeking Alpha, okay, dashboard with Alibaba Group. Okay, over here you can see the summary of the stock itself, the stock price chart, alright, how it has underperformed in the last 5 years. Okay, I think down 43%. The P ratio forward is only 12.6 times, market cap of 254 billion, okay, for Alibaba itself. And let me bring you to this part where it's quite interesting. Okay, so among all the Seeking Alpha authors, so those who have written a lot of stock analysis articles on Seeking Alpha itself, none of them has a sell or a strong sell call. It means all of them are quite positive on Alibaba itself. And this is by the Wall Street analysts. So both camps are pretty positive on Alibaba itself. So you can see that there are no bears or no bearish calls on Alibaba, and all the bulls are saying that, oh, this is a tailwind, is significantly undervalued, splitting into 6 parts, which can fetch a higher price for the standalone business units. All right. So all these, if you want, you can check it out. Is all the articles are deep dives that are very interesting analysis on the stock itself. So it can save you a lot of time when you sign up for Seeking Alpha and then take a look at the articles itself. Okay, so now let me jump over to the financials part. Okay, what we're going to do is look at the revenue and the net income. So revenue, you can see just this small chart. When you hover over, you can see how their revenue has grown significantly, very impressive growth year on year, all the way to from 2013 to 2022. So we don't even need to look at the numbers, we can just look at the chart and just tells us how Alibaba can continue, their impressive track record going forward. And if we were to look at the net income, okay, so net income is rather, I would say, fluctuating. Predominantly, I think sometimes they need to reinvest back to the business, but it's somewhat, growing very steadily over the past decade. The reason why it has dipped so much in the last year is because, like what I mentioned, right, the COVID lockdowns and also the hammering of the regulatory crackdowns by the Chinese government. So now that the stigma is being lifted off, things are maybe going to go back to normal, and they are maybe able to get even higher net income of more than 20 billion going forward, which will translate into very low P ratios once things start to rebound back to the norm. Okay, and let's also look at the cash flow portion. So if you were to look at the cash flow, so usually I will just skip over to the free cash flow. So free cash flow, over here you can see that their free cash flow is also having a similar trend to that of the net income. So it's been growing year on year, and in the last year itself has declined quite drastically because of the government regulations and crackdowns. Okay, the balance sheet. Okay, I will also just jump straight into the ratio itself. Let me scroll down to the net debt itself. So the net debt, right, is where if you have a debt, then you'll be a positive number. So right now, you can see Alibaba always has a negative number. So what does it mean? Right, their cash is more than their debt. All right. So this gives them a very solid balance sheet. Okay, for them to have the firepower to invest heavily into the emerging technologies such as cloud computing, digital payments, and even the AI. So in fact, right, Alibaba cloud revenue has been growing double digits year on year, and Alipay itself has over 1 billion users and over 70% of the market share in China itself. Okay, next, moving on, right, the third reason why I intended to invest in Alibaba is because Alibaba is one of the cheapest among the e-commerce peers. So in Seeking Alpha itself, I've cherry-picked a few e-commerce players. Here you can see Pinduoduo, JD, Mercado Libre is a Mexican e-commerce player. It's very big. It's somewhat like Amazon that is in Mexico itself. Amazon, and of course we have Sea Limited. Okay, and I've cherry-picked all these players and placed them into this table. All right, so you can actually compare their different financial metrics very nicely inside Seeking Alpha. Speaking of which, if you are keen to play around with Seeking Alpha and catch up on all these various stock analysis deep dives, okay, written by many these stock gurus, stock experts, I have an amazing affiliate deal where you can have a 7-day free trial to check it out. Okay, and you just need to pay a $99 for 1 year subscription, where the usual price is $239 after the 7-day trial. That's a good, I think, around 60% discount. So if you are keen to subscribe for the Seeking Alpha Premium plan, you can find the link down below in my description. Okay, with that, let's compare all these companies using a few financial metrics. The first one that we will look at is share price return. Okay, so share price return itself, you can see that Shopee, of course, has been fantastic, 660%. So 6.6 times return. All right, if you have invested 5 years ago. And then you can see the Mexican one and Amazon also doing not bad, 250% and 46%. Alibaba is the worst performing out of the 6 stocks. Okay, down 43% over a 5-year period. So you can, somewhat say that Alibaba is, is being undervalued for quite some time. And that's why, me being a value contrarian, I intend to look at Alibaba more as compared to the other peers. Next one that I want to look at is valuations. All right. So valuation, there are quite a few of them. There is P ratio, there is maybe price to sales, but what I want to look at is the enterprise value divided by the EBITDA. Okay, so you can see here. Okay, so there's some very weird jump because of the Mexican one, but over here you can just see the numbers lah. So among the 6 of them, again, Alibaba is the cheapest. All right, for this matrix itself, only 10.2 times EV/EBITDA compared to like maybe Amazon 20.8 times, and even Shopee. There's because they are loss making, right? They have more debt. No, sorry, they are loss making. That's why it's negative 64 times. And even among the the China itself, comparing to Pinduoduo and JD, Alibaba is somewhat cheaper. Okay. Next, the third financial metric is the free cash flow margins. Yep, this one. Okay, so for e-commerce players, right, their margins are generally not that high because they have to invest in a lot of logistics network, like Amazon, right? 0%, even though it is a $1 trillion company, and for Shopee it's negative 13%, and things like that. So Alibaba has 4.8%, not fantastic when you compare to Pinduoduo of 28%, but still, 4.8% is better than the other more established players already. And the last metric that we want to take a look at is the market cap. Okay, so you can see from the orange area, right, the orange line in the area, which is Alibaba. Okay, comparing that to Amazon and the other players. So Alibaba is currently having a $258 billion worth of market cap. That is, quite a huge market cap as compared to like JD.com is four times of the the Mexican player, right? I don't know how to pronounce the name, and also even Shopee itself. But okay, it is actually one quarter the size of Amazon. And if we were to look at it, dive more into it, right, we can see that Alibaba and Amazon has this 4 times difference, despite the fact that China has 3 times more population, 1 billion in population versus US of 300 million population. Based on this difference itself, I see somewhat like a market cap gap that Alibaba can catch up to Amazon going forward. And last but not least, okay, the fourth reason why I decided to invest in Alibaba is because of what Peter Lynch always advocate: invest in what you know. So actually, I'm acquainted, or have some sort like a circle of competence with Alibaba, actually through my wife. Okay, she's a frequent user of Taobao, and she has always bought cheaper stuff there as compared to what we can find in Singapore itself. All right. In fact, many of our light bulbs, kids' toys, furniture, and even my clothes that I'm wearing are bought from Taobao itself. And here's one classic example where I fixed the whole cupboard for my kids. Okay, that is being delivered by Alibaba's logistic player Cainiao. Okay, you can also check out my YouTube short with the link down above. Okay. And to end off, if you want me to cover any other Singapore, Hong Kong, or US stocks, do help me to like and subscribe to my channel. Okay, you can comment down the stock that you want me to go through. Next up, if you also want to check out another e-commerce player, Sea Limited or Shopee, for a quick comparison, you can check out this video over here. Okay, thanks for watching, and I will see you in the next video, and bye bye.